So, if you ask me to describe how the day went, I'd say Wall Street took this breath. It paused for a little bit. We seen people kind of booking their profits, taking their profits, de-risking, cutting down, cutting back a little bit, and charts mainly cooling off. Today we seen the S&P 500 slip 0.3%. The Nasdaq had edged down 0.1%. We seen the Dow, it dropped 0.5% today. So it wasn't a crash. It was just this market that's kind of catching its breath, leaning on the wall after just completely running to record highs as fast as it possibly can. And this is even without the fresh data we normally would have got today. But remember, the government is still shut down, so we're going to continue not getting these official reports. And traders are treating an October rate cut like it's virtually locked in right now. But under the surface, there's this tension building. We got JP Morgan's Jamie Dimon. He issued one of his warnings yet again. This is like number 50 or whatever we're on right now. And it's kind of insulting because this comes right around someone's third birthday. It's kind of like he's the party pooper right now. And we'll talk about that here in a bit. But what Dimon said is, and this was during a talk with BBC, he's far more worried than others about what's potentially coming. He's watching what's going on with U.S. fiscal weakness, political gridlock, attacks on the Fed, independence, and this slumping dollar's value. And in his words, the level of uncertainty should be higher in most people's minds than what I would call normal. So he's saying, And if most investors are pricing in maybe this 10% correction, Dimon said he's closer to this 30% range, which he mentions this timeline and he says like, he softens it with like, what do I know? Like, I don't really know, but if there were to come, I'd expect it to be around 6 months, maybe 2 years. And I thought that was weird because this 2-year timeline, it kind of overlaps and lines up perfectly with the average lifespan of past bull markets. And we'll talk about this here in just a bit, but Dimon didn't stop there either. He warned that geopolitics, remilitarization, who knows if I said that right, and runaway spending are creating a world far more dangerous than people would think or even know. And this one was interesting. He said when asked about crypto, which of course a banker will say this, they want your money in their bank, and like banks hold the dollars, so they prefer dollars over crypto. But Jamie Dimon said rather than stocking up on cryptocurrency like Bitcoin, he'd be stockpiling bullets and things that go boom, if you read my lip, read between the lines. But still, he's not saying that the AI boom is fake. It's just the hype cycle always ends the same way. We've seen this story before. AI will pay off in total, like it'll benefit civilization just like cars did, just like phones did, just like television. But most of the people involved, just like in the early booms, it won't go well. Some of those people will disappear. Now, we got to talk about whose birthday it is. And like, I'm really excited about this because it's birthday time. And while Dimon, he's making these warning headlines, the market is celebrating something else, and it's whose birthday it is. So coming up on Sunday, the market, this bull market officially turns 3 years old. So since its birth back in October 2022, it's been one of the most relentless runs in recent history. Not only are, and I could scroll down so we could see it, I got all of them highlighted. Not only are all 11 sectors of the S&P 500 in the green for 2025, so they're all killing it, but 4 of them, led by tech and industrials, have outpaced the index entirely itself. So information technology, we see that's up 22%, industrials up 17%, financials up 11%, utilities up 18%, so they're really killing it. And there have been 14 bull markets since 1850, and on average what we've seen is they've lasted longer than, they've lasted 4.6%, 4.6 years on average, with the S&P 500 returning 160% in gains. I don't know why I couldn't get that out. But every bull market that's reached its third birthday, it's made at least 5. So that's why I thought the comments by Dimon were pretty interesting because we should consider that into our thesis. Like, this man's saying, all right, like, if not 6 months, maybe 2 years from now, and that lines perfectly up with this 5 year average that the bull markets that hit their third birthday continue to at least five. So he's kind of like setting the time range, like, that's just a date to watch. So we just got to consider that. And then with earnings growth coming in, it's slowing down as we're heading into earnings season. The S&P 500 profits are expected to rise 8% in the third quarter, which, I mean, that's still decently strong, but that's down from 12% last quarter. And then you throw into the fact that we're not getting any of this economic data right now that influences the narrative. We're just kind of going with the flow. And now we're on day number 9. Let's look at the headline right here. Day number 9 of the federal shutdown, and it's starting to sting some people and kind of hurt. It's hitting home because 2 million federal workers and over 1 million active duty service members are about to miss their paychecks or coming up on it pretty soon. October 7th was a date to watch, and for sure October 14th, because that's when those will be the 2 weeks people will get paid for their first pay period of the month. And when we hear missed paychecks, we hear that, but are you really thinking about what a missed paycheck means? Well, what else that could possibly mean is missed mortgage payments, missed payments on other credit products like credit cards or loans, and that damages credit scores, and then that delays spending, and those are all things that ripple through the economy, and eventually it reaches Wall Street too. But for now, that's kind of good for stocks because some of the data we've been getting, it's been coming out pretty good, and then you got Fed members saying, well, I don't want to cut rates. The data kind of looks good. And we didn't get that. Like, we didn't get jobless claims today. Jobless claims were normally scheduled to come out on Thursdays for the previous week. We didn't get that, but we did get some estimates from 2 people, Goldman Sachs and Oxford Economics, and what they both estimated were around 224,000 jobless claims last week, which is barely up from before the shutdown. So jobless claims haven't been really alarming just yet, but those are just estimates. Like, we didn't get the official numbers out, but you know, they're probably not too far off, and if they are, that would kind of be a shock, right? But the BLS can't say anything else because, well, I mean, they're closed, so we really don't know what these official numbers are. But if we give context, economists expected, and this was for the jobs report we were supposed to get last week for September, what they were expecting those numbers to come out for were 50,000 on farm payrolls in 2025. That's looking pretty good because that's up from the 22,000 in August. So that would have been a slightly better report, even though, like, it's obvious signs the labor market is showing cracks. But without the data, the Fed, well, they're essentially steering the economy blindfolded. Like, and I keep saying I'm sure they got like some idea of what the numbers should have at least been. Like, they got their own predictions that are probably more accurate than the public facing ones. So I'm sure they're not completely like oblivious to what's going on, but we are seeing the labor market start showing worries. And Jerome Powell mentioned that inflation, like, yeah, the risk of inflation increasing, like, that's a risk the Fed has to consider, but right now the risk of unemployment increasing is more of a concern for us. So we're cool kind of like ignoring inflation right now, and we're not getting the data to really show that. And that's exactly what makes this so risky. The longer the government stays shut, the longer the Fed has to guess what's actually happening in the real economy, and the more pressure builds to cut rates again. But some officials are still saying no. But before we get into that, I've been asking a lot of people, like, hey, like, how long do you think this government shutdown is going to last? And they're like, well, it's Trump and he holds the record for like longest government shutdown since 2018, 2019, 35 days. I don't know, like, I think close to that record or even more is what a lot of people saying. And I just think that's interesting because when everybody like, and this is just where I'm at, I'm in Oklahoma City, so I'm only talking to people from and around here. Maybe like we're all like thinking the exact same, but if the majority thinks that's going to happen already, that kind of like self-fulfills itself, just like when people see a recession coming and everybody expects a recession, it comes. Or when people expect inflation, like the companies are like, well, they're all like looking around at each other at the table like, I mean, they're expecting us to raise costs anyways, like, let's make more money, fam. So in a way that self-fulfills itself. And even beyond that, just thinking more about the government being shut down, I was thinking about how that builds more pressure because as these people aren't more like the labor market's already showing cracks, and the Fed's already witnessed. We've already witnessed the Fed mention like, "Hey, we're kind of concerned about the labor market." We're expecting this data to come in a little bit better from August as far as the September payrolls numbers, and I got some predictions right here. Carlisle Group, 17,000 jobs added, so they were expecting it to come in way lower. Bank of America, 0.5% annual payroll growth. Goldman had it at 80,000, so a real big beat. Revelio Labs, 60,000 jobs added, so slightly more hot. And then ADP, 32,000 jobs lost. So they were expecting it to go negative if this source is if that's accurate. And I just thought it was convenient. And I'm going to kind of make this, we're not going to talk about this all night, but the data was supposed to slightly come in better, at least expectations, from 22,000 to 55,000 or something. And now the government's been shut down, so we didn't get it. But the Fed's like lifted its eyebrow at the labor market. So now they're blindfolded. And Trump really wanted this shutdown because government spending's this problem, and he really wants to like implement Trump agenda. And remember, he wanted rates cut and the labor market and everything we just said. And then on top of that, now some people's credit or missed mortgage payments, and think about how that just works its way throughout the economy. Just like super tiny, because like the federal government doesn't employ everybody out there, but it's going to have its impacts. So I don't know, maybe tinfoil hatter over here, but some people aren't necessarily worried about the labor market. Some Fed officials, to be exact. Governor Michael Barr says that inflation, it's still running too hot and too high, and he warned against getting complacent for the members over there at the Fed, reminding everybody that the Fed's own projections show inflation not returning back to the Fed's 2% goal until at least the end of 2027, which is 2 years from now. 2 years from now. Wow, why does the 2 years keep coming up? But Michael Barr said he's not blind to this slowdown. We're seeing this unemployment creeping back up to 4.3%, but he insists the Fed shouldn't rush into deeper cuts without more data supporting that view. But in his view, uncertainty is the real enemy here. And I mean, that's technically everybody's enemy, so I think we're on a common ground here. The more uncertain things are, the harder it is to make forecasts or predictions. And just with where everything is right now, that's not a good sign. So right now, the CME Fed Watch tool for the October meeting, it looks like we're still spot on. Like none of the talks here, like we didn't get any data. We got estimates, but those aren't official. We got Fed Bar urging to just don't be complacent. That really didn't move the CME Fed Watch tool very much. So we're still seeing this 94.1% chance of this cut in October. And then December 10th, a lot of people are still seeing 2 cuts on the table before the end of this year. So one in October, so this month, October 29th, and one for December 10th, putting us at this range of 3.5 to 3.75 on the Fed funds rate. But back to that point about this labor market that's kind of showing cracks, because I kind of forgot my drift there. When more people see like, oh, it's kind of getting like tough out there, like federal workers, just add that as the cherry on top, but the labor market kind of slowing down and that rippling through the economy, that influences more people to save money. And when more people choose to save money, businesses make less money. And when businesses make less money, there's less need for hiring. And we're already in a low hiring economy right now. So it's not completely crap out there, but you see what we're working with. And then that even further insulates the need for rate cuts in a way. So I don't know if this is just like a chess piece move here for Trump or what's really going on, but either way, like I said, uncertainty. That that is the enemy. But that's kind of where that leaves us for the day. We've got this Fed that's divided, and they're going to continue to be divided. We got this government that's frozen and data that's frozen and doesn't seem to be thawing off just yet. And a market that's choosing to party and have a good time. That's what this environment's looking like. And then we got Jamie Dimon over there, like he's the weirdo at the party, like calling the cops. Hey, I'm just warning y'all. Like he's giving this dramatic warning for like the 20th time. But remember, he is the CEO of the biggest bank in America. So I don't know. I'm sure he knows a lot of people and gets to see a lot of data. But this is all as this market's hitting a new major milestone. But hey, we're on the 3rd birthday. So happy birthday, everybody.